All right, what's up, Rippy Global? What's up, Rippy Global? Some updates. We're going to go through some of our current plays for our 2K challenge. We're going to also screen finviz for some plays for the upcoming week based upon our screener settings here. And then we'll go ahead and make a watch list and some plays for next week. We'll also discuss some call flows that came in from flowalgo that kind of caught my attention, and we'll try to prepare for this upcoming week. We had a great first couple of days of this past trading week. Monday, Tuesday, Wednesday was very, 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 very good to us. Thursday and Friday was pretty much shit for us. So nothing good there. So let's go ahead and take a look at finviz first of all, and we'll start to create our watch list here. Let's go ahead and change our screen over to finviz. All right, here we go. We got our settings up here. Just want to make sure I'm not missing anything in our settings. All right, so here we go. These are all of our tickers based upon our settings here that might be primed to go. Let's see how many pages we got here. 4. We'll go through these here. So the tickers that we're familiar with, AMC, we're familiar with DocuSign, we're familiar with GameStop, we're familiar with Robinhood, we are familiar with Lucid, we're familiar with Moderna, Peloton, Snow, Square, and that's about it. So let's go through those and see if we can find something in there that's playable. So first, we take a look at AMC. AMC is showing little buying support here around 29.27, but especially with news of Omicron and variants and all this other stuff, that's why you see a big drop out of this triangle here. And more than likely, you're going to see more selling pressure, and you're going to see the price come down even more if there's any kind of news. So too volatile for us, so we're not going to play. The next ticker that we're familiar with is, nope, I thought that was DocuSign. The next one's DocuSign. Obviously, we know DocuSign took that big gap down, huge selling gap. It is in oversold territory, though. So that's why you see a little bounce up here. finviz did draw a trend line coming here from the higher low, the lower low, and then even a lower low. So that's that trend line there. It's using it as support as of right now. But this wick here is a big selling wick with this big selling wick here creates this big bearish candle, and then a continuation from yesterday's candle. So it seems like it's starting to point more down on the RSI, letting you know that it's super weak. So this trend was not strong at all. So DocuSign is definitely something that we're probably not going to play. If anything, we'll play puts on DocuSign. So if we do want to write down DocuSign for puts, we can, and we'll go ahead and make our levels for that when we switch over to E-Trade. Take a look at GME, GameStop here. GameStop is showing a support bounce. I guess this line here, I guess, has been a support bounce. support bounce. And then now the last 2 trading days have bounced off of this 151, 150 area here. GameStop did drop on earnings. However, yesterday's candle is showing that buying pressure is coming in, as that is a bullish hammer candle right there. However, the volume itself is not that great as far as being able to break this downtrend, because it doesn't go above and increase the volume for the day before. The RSI is nearing that oversold territory, which is down here. It bounced off of it twice so far, and right now it's just kind of flatlining right above it. So GME as of right now is not a play for us. Robinhood's been beaten down lately. It's been riding oversold territory since the middle of November. My recommendation for Robinhood would be to, honestly, man, you minimum has to break the 20-day moving average before maybe playing into the 50-day moving average. But I mean, this thing has just been on a straight downfall. It hasn't broken the 20-day moving average since we played this back in the end of September, beginning of October. We scalped this, or was it somewhere down here that we scalped it down here in November. But yeah, it hasn't passed the 20-day moving average as of yet. It tried to in the middle of November, rejected, tried to again the end of November, rejected, and it hasn't even got close to it since. So it's super weak on Robinhood. Probably look at puts. It's at an all-time low right now at 20. So maybe if it breaks 20, maybe look at some scalping puts, because it's in such oversold territory. I'm not sure you would want to swing it, because you might get a small little bounce. But if you want to swing puts, I would wait for the rejection of the 20-day moving average. If you notice, every time it rejected it hard and continued back down. So keep that on watch if that's something that you like to play in the future. All right, here we have Lucid. Lucid has been beaten down last couple of days. They finally came out with the news that they're doing a convertible debt. And basically that means that they're going to be adding more debt to their books, if I'm not mistaken. So obviously, you know, that's bad for investors. However, long-term outlook on Lucid is very bullish. Short-term wise, it's trading under the 20. It broke below the 50 twice. However, the 50 is now showing as minor support, as it kept reclaiming the 50. Now, if we break the 50, the next level down here is the 200, which is around 26, which kind of began this whole bull run here that happened. RSI, it was in oversold territory for a while. So obviously it needed to cool off. So coming back down to the 20-day moving average was its cool off period there. It was supposed to bounce and continue. However, it did not. Some selling pressure came in. Buyers tried to push Lucid back up, but it just rejected that 20-day, came right back to that next level, which is that 50-day moving average there. So as of right now, Lucid is not a play for us. However, Lucid breaks this 50-day moving average at 37. We'll be looking at puts going down to 26. So just to put on our watch list, Lucid, we're going to look at puts. We'll confirm our levels and charts once we go over to E-Trade. Southwest Airlines, we could take a look at. I don't play love too much. I know some people do. It's bouncing off a support line here. I'm more of a DAL Delta person when it comes to trading airline stocks, or AAL, but primarily I like Delta. But it seems like it's for the third time bouncing off of this support. Every time it's hit the support, it's bounced. So let's see if we could get another bounce there and maybe fill the gap here at 43, or perhaps come to this rejection area here on the 200-day moving average. Is that the 200-day moving average? Yep, 200-day moving average. So it's been rejecting that lately. So let's see if it continues to reject the 200-day moving average. 1 rejection, 2 rejection, 3 rejection, 4 rejection here. So for those of you who I know that like to play love, that would be my play there. Here we got Moderna. No play for Moderna here for us. It's trading underneath the 200-day moving average as of right now. And it's rejected it the last trading day. However, it's using this trend line as support. So right now it's kind of in a, one of these little ranges of that support and that 20-day moving average. So let's see if it breaks it. Last time it broke and then it used, or it broke the 200-day moving average. This is the 200-day moving average. It broke the 200-day moving average. It tested the 20-day moving average and rejected, tried to test the 20-day moving average again, rejected. When it broke the 20-day moving average, it rejected here on the 50-day. So if you see all these moving averages act as supports and resistance, and once it breaks it, it goes to the next one and the next one. And then if it breaks it to the upside, it goes to the next one, the next one. So this is why I use SMAs when I do my charting. I know a lot of people ask me why I don't use EMAs. Just SMAs just work better for me. I know how to read the support and resistance for them a lot easier. I'm just used to it. Everyone's different. Nvidia here, I would just draw like a little trend line here and wait for it to break that trend line, because right now it's still in a bullish channel. This here is a bullish channel. You got your resistance and your support here for this channel. Basically, it's just been trading the channel, and then now we're down here to the bottom support of that channel. So if we can go ahead, again, just draw that little, trend line right here. And then if you break that trend line, then more than likely you can play calls up to the top of the channel, which is around that 350 area. So we did play, from down here, I believe it was around 290. We caught 330 calls, and we played it all the way until about 320 or 318 when we sold here. So we're going to be looking at getting back into those 330 calls if we could go ahead and break this trend line here on Monday. So let's go ahead and write Nvidia down on our watch list for calls. And again, we'll make our levels on E-Trade there. Let's look at some other things on Nvidia real quick. Our RSI is not oversold. It's right here in the middle. So a nice little pop up will give us some good room to run to 330, 340. Volume has been pretty high since the middle of November. So as long as we're keeping this high volume that's been over the last month and a half or so, that should be able to help push us over that trend line too. So everything is looking good for Nvidia calls. Just wanted to double check that info there. Peloton, I know some people are in Peloton puts, so we could definitely take a look at this here. Peloton is really hovering over that oversold area of the RSI. Once it goes below 30, that's going to be that oversold area. Doesn't mean much. It's just letting you know that it's just super weak and super oversold. As far as people are just heavy selling pressure, just selling, dumping Peloton. Obviously, you can see here. You have rejection of this 20-day moving average. It's been rejecting it lately. Heavy rejection. Even on a good volume day, it's still rejected to 20-day. So looking super weak and already making another low here from this little channel. So you have pretty much you have a downtrend, little bear flag, downtrend, little bear flag, downtrend, little bear flag, downtrend. So it's just keep breaking down to the downside for Peloton. Not something that we're going to play because it's super beaten up already. And there's other plays for us that look better. Let's take a look at Roku here. Roku a couple of days ago went off. We have a little cup and handle on the RSI. Doesn't really mean much with a double bottom here on the oversold area. The reason why I say it doesn't mean much is because it's trying to break this 20-day moving average to work its way towards the top of the cycle. The last two trading, or the last 3 trading days, the first 2 of the 3 trading days, it has used a 20-day moving average as support. Yesterday, it broke below that 20-day moving average. So we're either going for the gap fill here at 216 and coming back to this bottom channel support to see if we can go back up to this purple line 274 area, which is top support, or We're going to get some volume coming in on Roku. We'll break that handle here on the RSI. We get some nice little volume pop here and go back above the 20 and go back above the or towards the top of the channel here to see if we can break it towards the 50-day and the 200-day moving average over here. As of right now, Roku is not a play for us. We have snow. Take a look at snow. So we have snow holding the 20-day moving average the last 3 trading days pretty much. So snow looks really good right now. Great volume coming in the day before, the last trading day, I mean. It held this bottom support trend line very well, came and retested the 50-day moving average. It used the 50-day moving average as support, confirmed the 50-day average as support. Now it's testing the 20-day average as support and seeing if the 20-day moving average is good support. If that is, we can go ahead and come back to this selling area here at 400. So I like snow. Let's take a look at snow, put snow on our watch list for calls, and we'll make our levels on E-Trade. So far we have DocuSign puts, Lucid puts, Nvidia calls, and snow calls. So I mean, we could look at Wayfair. I don't really trade it much. I don't really talk about it much. It was a stock that went all the way down to $3, went all the way back up to $300 through COVID. It's let's just go to Square. More people trade Square than Wayfair. So we're looking at possibly a bear flag breakdown for a double bottom here off of the support to see maybe if we can bounce back up to here, which was previous support line. We have the SMAs all crossing down, so Square definitely does not look good for any calls as of right now, showing weakness. Hasn't broken the 20-day moving average since it traded above it in the beginning of November. Ever since November started, it's used that 20-day moving average as resistance. Every time it's tried to get there, it's died down. And now it's so far extended from the EMAs. It's just super weak, oversold territory. You may get a double bounce here, like a cat bounce, and maybe break this 195 going to 200, but I really don't see any kind of calls coming in until we break 200, and then we break the 20-day moving average as support. So far, just scanning on finviz after doing that, my 4 plays for the week are going to be, and especially looking for Monday, are going to be DocuSign puts, Lucid puts, Nvidia calls, and snow calls. So let's go ahead and switch over to E-Trade. Let's go ahead and start charting these. Take a look at the option chains. Take a look at flowalgo and see if we can look at any particular options that would look good for the coming week here. And then we'll do some TA on our current plays that we're currently in. So no worries there, guys. So let's go ahead and take a look at our first one here. DocuSign puts. So let's take a look at Docu. All right. So, one of the members asked about DocuSign. We made a line here and said that we would like to see above 187 before we look at any calls or anything like that. That kind of puts it back into support area. You know, this was a heavy support area at 187. So anything back above that will regain that support area, and you can see it, you know, go back to where it was before. With all the EMAs crossing down, huge gap coming down from 230 down to 150. It's just showing tremendous weakness. The MACD, histogram, everything, I mean, it's negative 30. I don't think I've ever seen anything that low. I mean, even scrolling out to the history of DocuSign, it's never seen the MACD ever come down to negative 30. That is super weak. It was outside of the Bollinger Band, obviously, with such a huge $100 and something drop there. So it kind of consolidated and worked its way back inside the Bollinger Band. Just a small little bounce here, but I think that was an overall market bounce. So a lot of people, got euphoric and was like, hey, DocuSign, it's coming back. Oh, let's play the gap fill. And then they got eaten right here. Especially if you don't know how to read candles. That's a reversal bearish candle right there. Shooting star, hammer candle, inverted hammer candle, whatever it is you want to call it. So it negated this candle immediately on the confirmation of this candle here. So obviously, once you saw that, if you knew how to read candlesticks and read your patterns and wait for confirmation, you would have saw that it rejected and went ahead and played puts. And then since you're breaking lower than the day before, you have continuation. If you were in puts this day, or if you're in puts this day, what you're going to be looking for is a continuation lower of 142. We're not going to play puts on DocuSign, so we're going to cross that off of our list here, just because the chart doesn't look good for us to enter into puts right now. If anything, what we would play is maybe if a bounce comes back up to here, the 10-day moving average. You see here that before it had the big drop, it used a 10-day moving average as heavy resistance. So what I would like to see is maybe a bounce of DocuSign to the 10-day moving average and see what happens there. If it bounces off the 10-day moving average and rejects and comes back down, then it's going to be a hard rejection, just like it's been, here, and we'll play it down to the bottom of the Bollinger Band. However, if it breaks that 10-day moving average, then we can possibly look at calls either to our target here at 186 for the bounce up, or depending on how far down this 10-day moving average is where it breaks it, we can have other levels here on the chart. But that's my TN DocuSign, no play for us next week. Let's take a look at Lucid. All right, here on Lucid, I like. And here's some scenarios that can go down on Lucid, some A, B, C scenarios here. So scenario A, we have kind of an indecision candle here on the daily. Both buyers and sellers couldn't really gain control over the price action of yesterday. So what this means is it kind of negates that trading day, and we'll look at the last trading day and see that we have heavy selling pressure. So my indication is that Lucid is still weak. There's still selling pressure coming in on Lucid. So scenario A is that we continue to downtrend, riding the bottom of this Bollinger Band. And with the break of the 50-day moving average, it's just kind of like a double conviction of puts. So I would look at scalping puts, only because we're at the bottom of the Bollinger Band. If we were rejecting the 10-day moving average and it was confirmed, I would look at swinging puts. But since we're at the bottom of the Bollinger Band already, if I was here, I would look at swinging puts. But since we're here now, what we want is a confirmation of the break of 37.50. And if we can get that, we can look at possibly retesting the low of 35.80. So maybe we'll look at 36 puts and we'll look at 35 puts. So let's take a look at the option chain for next week for Lucid. Information we don't need. All right, guys, so we're looking at 36 and 35 puts for next week. So just based off of Friday's trading day, the 35 puts was the heavy hitter. Total volume, 16,000, open interest, 7,500. If you got in early, 38s were the best puts for the day. I'm assuming that was a day trade, 2,500 open, 28,000 played. A lot of open interest on the calls, not a lot of open interest on the puts, but exceeded volume. Look at this, 5,000 open interest, but 15,000 on the puts. The call side, yes, the call side did break some of these, 11,000, 19,000, 2,000, 13,000 there, 2,000, 13,000, but some of these also didn't really break much either, like 2,000, 1,000, 4,000, 1,000. 14,000, 9,000. So it's letting you know that the buyers are starting to slow down on buying call options for Lucid. However, it's showing you that they're starting to ramp up on the put option. So like we said, 36, 35 is ones that we would look at. So let's look at the 35 only because it has higher volume, higher volume to open interest ratio. So it's showing you that there's higher liquidity and demand in this stock. So that's going to help us with our IV and Vega rush here for the week. So we have a price of 110 on these contracts for 35 puts. We are at 37.60 now. So if this is going to be a play for us, we needed to break again below that 50-day moving average, which is the top of the option chain there, or was the top of the option chain. So that 50-day moving average here is again 37.40. So we need 37.40. So at 37.40, let's just say 37.50 for the easy math. If we were to enter into these 35 puts, what is our projected profit if we hit 35? Now, easy math here would be like, okay, on expiration day, the way to calculate this is my strike price, which is 35, plus my contract price, which is 110. That means that the price needs to go down to 34.10 in order for me to break even at expiration date, to not lose or get any money. In order for me to make 100% at Friday, 3:59 p.m., I have to add my option contracts again to that break even price. So that means that now my price has to go from 35 down to 33.90 down to, oh wait, that's wrong. 33.90, 22.90, 22.80. So 32.80 is what the price has to come down to in order for me to make 100% for next week. That's the basic math. If you're holding throughout the whole week and only selling literally 1 minute before the market closes, but that's not what we're doing. So we have to use the Greeks in order to calculate, let's say on Monday, what our price would be if the price went down to 350. So if it was at 375, that's a $2.50 move. So let's go ahead and add our gamma to our delta, which will be 0.34. Let's go ahead and add, the gamma is basically going to still be the same for a $2.50 move. So let's add our gamma again to our delta. So 0.34, now it's 0.4. Let's add our gamma one more time to our delta. Hold on, sorry, I did that math wrong. I gotta write this down. So we take our delta, which is 0.28, and add our gamma, which is 0.06. That gives us 0.34. 0.34 times 2.5 equals, let me take out my calculator. Sorry, it's easier to write it down. I was trying to do it in my head, it didn't work. So again, you take your delta, which is your 0.28, plus your gamma, which is 0.06, and that gives you 0.34. You multiply that by 2.5 because we need a $2.50 move. So that's why we multiply it by 2.5. For every $1 move in the stock, you add the gamma plus your delta, the gamma plus your delta to your option price. So again, for every $1 move in the underlying stock, you add your gamma and your delta to your option price. So since we need a $2.50 move, we multiply by 2.5. So 0.34 plus times 2.5 gives us 0.85. 0.85. So our gamma delta for a 2.5 move is 0.85. Now let's go ahead and calculate our IV and our Vega. Okay, so if our IV currently is sitting at 107, basically what we do is we look at the IV of the current at the money strike, which is 38 at this point, because it's not below 37 for puts to be at the money. That IV is 109. So basically what we do here is take 109 minus 107, which is 2. And then we multiply our Vega times 2, because our change in our IV, once our 35 calls come into money, will be what the at the money IV is right now, which is 109. So 109 minus 2 again or 109 minus 107 is 2. 2 times 0.01, 18 is 2 times 0.018 equals 0.036. So we have our IV Vega for a $2.50 move, which is 0.036. And our Gamma Delta for a $2.50 move, which is 0.8. So now what we do is add that 0.036 plus 0.85, and that gives us a total of 0.886. Now we add that to the current option price, which is $1.10, $110 a contract. So 0.886 plus 1.1 gives us a total contract price of 1.986. Now, to find out what our percentage return would be, we take that 1.986 and divide it by our original contract price, which is 1.1. That will give you 1.805. Now you have to minus 1, because that's how you get your percentage. And then now you get 0.805. So that's an 81% return on your 110 investment. So $110 investment, you'll get an 81% return if Lucid does a $2.50 move going from $37.50 down to $35 if you were to get the $35 strike calls. So honestly, for a $2.50 move, which is about a 7% move down from its current price, honestly, the risk to reward for Lucid is not great. You know, I think the IV is too high. I think one little slight pullback in the opposite direction, so in this case, on the upside, we'll go ahead and start killing the premiums for these puts. If you were already in puts, then you can go ahead and play the continuation. But as far as for me and doing the math here on the option chain, the risk to reward ratio for a 6 to 7% move to the downside for Lucid at only 81% reward is not a great risk to reward ratio for me. So for me, Lucid puts is a no play. However, because it's still in a downtrend, you know, I want to see it either come back up to the 10-day moving average and reject, and that way we can play the swing puts to the downside and have more room down. Or if we get a heavy rejection and a heavy sell below this 50-day moving average, then I'm just going to scalp the puts. I'm not going to worry about it hitting the 35 strike mark in order for me to get in the money. I'm just going to play the momentum at the break of below 50. And if whenever I see green, I'm just going to take it. And then, you know, every mini rejection that you see, you know, you get back in and you take the scalp, you take the scalp, take the scalp. That's how I would play it. But for a small account, for the risk to reward is just not there. So no play for us. Let's take a look at Nvidia here. So Nvidia, we're kind of, you know, you can say that we're in a bull flag here. You know, we have basically flat support here with declining lower highs. And then basically we're just going, hopefully we would get a nice volume pop and break out of that. Just to show you guys quickly what I'm talking about here, you know, you have this flat line support here, and then you have your thing here. So it's building sort of like a pennant. So I think that we're going to continue to reject this trend line, come back here and test this support here at 290, and then we'll start to see the break up to the upside. So that's just my personal TA on what it looks like. Layla, sorry. That's my personal TA on what that looks like there. We are looking like that we're getting a 10-20 cross to the downside with a rejection here on the 20-day. So it does show a little bit of weakness. We do have some selling pressure coming in on Nvidia too here on the volume. Let's go ahead and pull up the MACD. MACD we have on the downside as well. Histogram is super low. It's not even showing up on the screen. It's so low. It's all the way there on the bottom. And we have a double top on the top of the MACD. A double top on top of the MACD, and then we have a MACD cross to the downside showing you that sellers are in control. Histogram is getting weaker and weaker, letting you know that sellers are getting stronger. Volume has increased as well with the selling pressure. So that's why I say that we're going to go back down here to this demand zone. If you see here, we've used this as support, heavy support. When we were consolidating here in this range, we just kept using it as support and this line as resistance. And then once it broke that resistance, it popped up. And then it went outside of the Bollinger Band and had to work its way back in. Started using the 10-day average as support. Once it kind of got to the squeeze area here, it rejected that trend line, worked its way back down below the 10-day moving average, and then started using the 10-day moving average as resistance. And then once it's once it broke the 10-day moving average, it started using it as resistance, and then it completely rejected it. And then buyers came back in, pushed it back up once it broke outside the Bollinger Band. And then once it broke this, what was heavy resistance before, and then it used it as support, broke the 10 and 20-day, came back to try to break the trend line and rejected the trend line, used the 10-day moving average as support, broke both the 10 and the 20-day moving average, came back down to old resistance area, which was new support. And then yesterday's trading day broke that new support, and more than likely we're going to see Nvidia come back down to 290. So we'll probably play Nvidia puts if we can get below 298. We'll look at 290 puts. So I'm going to write that down for us to look at the option chain to see if 290 puts might be a play for us. If we can get a break of the 10-day moving average here at 315, if we happen to get a pop up, what I'm going to be looking for is a break of this trend line here for us to go ahead and get to 336.01. So I would need a break of around 318. So let me write this down. Nvidia break and hold 318 for me to get 330 calls to try to hit the top of this Bollinger Band here at 337. 330 was a prior resistance area here. So, you know, we'll take 330 calls, get them in the money. If we have to sell them, they'll have a little bit of intrinsic value. We'll go ahead and get some good money for those. Otherwise, if it breaks, we'll take it up to 337 more in the money, and we'll be golden pony boy on those. However, we want to mark our puts, and we want to make sure that we break below 298, let's say 298.74, or 298.75. We break and hold below that, then we'll look at 290 puts. So let's take a look at the option chain here. Take a look in the video. Okay, let's take a look at our calls here. So if we were to break and hold 318, we would be looking at 330 calls. So not that great volume on 330 calls for this week's expo. Let's take a look at next week. Some decent volume to open interest on the following week for 330. So we'll keep note of that. Let's see the end of the year. Not that much. Let's go to January monthly, because I already know that these two won't be as much as the January monthly. And no, not that much interest. So if anything, the most interest comes on December 23rd, 330 calls. And just to tell you, just off of the base of the math, if we have 2 weeks expo and we're looking at a $12 run, if we're holding to our levels and it goes to 330 with that confirmation, more than likely these contracts are probably going to be worth, I guess we would have to look at, if it's $300 now, we needed to go $18 in order for us to get into contracts. That means that the current at the money contract would be $300 minus 18 would be 282 calls. There is no 282 calls, so the next call would be 280 calls. Nvidia would be too expensive for 330 calls at a confirmation of 318. So as of right now, because we don't have any confirmation on Nvidia for calls yet, calls won't seem like a play for us. So let's take a look at puts. There's no interest in those calls, but if we break and hold below 300 for the most part, we take a look at 290 puts. So 290 puts. Nice volume to open interest ratio, about a 2-to-1 there, compared to 330 calls for next week. Which have a total volume of 8,000 to basically 16,000 open interest. If anything, most people are looking at the 310 calls. So 310 calls versus the highest put option, which is 280. So they think that there's more downside to Nvidia than there is upside. So they think that Nvidia has more of a chance of going in the money at 280 puts than it does going in the money at 310 calls. 380 puts are running $1.83 versus 310 calls, which are running $4.50. So if you were a market maker, do the math. Do you want to spend $450 per option contract to exercise, and you have to boost Nvidia over 310 in order for you to exercise those options? Or do you want to pay $183 to exercise Nvidia options and just basically push the price down and exercise those options at a discount? Basically, you're getting close to a 4-to-1 discount for playing puts and exercising puts than you are to options. So puts might be a play for us for Nvidia. So I'm going to go ahead and make that a watch list play for us. So Nvidia, we get a break below 300 with a break and a hold of 298.75. We're going to be looking at 290 puts. 290 puts. We can look at 280 puts, but we're going to look at 290 puts just because it's a little bit more in the money or closer to in the money for us. And we can get a nice little delta push on these 290s if we can go ahead and get that confirmed $8 drop for in the money. If anything, we can roll into 280s, knowing that that's kind of our limit of where most of the volume stops at that point. So if we can confirm our break of 290 and get in the money there, we can go ahead and roll those over to 280s and try to play that to over here, which is the 50-day moving average on Nvidia. So one play we have so far is that Nvidia 290 puts, so good TA on that. Last and not least, we take a look at Snow. So Snow, guys, I really like for calls here. If we can get it over this trend line, as well as this selling pressure area that's right here, all these selling wicks, this selling pressure here, 370, 375. We need that break of 375. Let me write that down. Snow, break and hold 375. I'm going to say that we're going to come back up to here to this next selling pressure area here around 400. So let's take a look at Snow 400 calls and see if that's something that we would want to play. The volume is not that great. I think people might be waiting on confirmation. You got some early entry people here. However, your call to flow, your call to put ratio is very heavily leaning towards Snow breaking that trend line next week. A lot of early entries on it. We need to wait for confirmation, but it's showing that, I mean, look, volumes in 1,000 on a couple of these, couple hundreds, and then you only got, you know, low 200s, 300s here on the volume here. So even if we go a week out, we take a look at what people are thinking for next week. Not a lot of people are buying puts. Some people are buying a couple calls here with that break of 375, which is where we needed to confirm for us to get in. Let's take a look at January monthlies and see if anyone's touching anything there. More calls, less puts. So we're going to take a look at Snow, guys, this 400s real fast. If we can, and they're cheap, they're 173 right now. So if we get a break and hold of 75, that's a $5 move. We're probably going to be looking at the contracts being worth around $3 or so before us entering in. If we want to get early entry, we would probably just get one contract or so. The way that it's holding the 20-day moving average here and the buying pressure that's coming up here from the 10-day moving average and all the buying pressure from the couple of days even before that is leading me to believe, with a MACD cross and histogram going to the upside, that we are going to break this downtrend here. I honestly really do believe that we break this trend here and go to the upside. So I'm going to probably get one contract as an early entry, as long as we break above the close of yesterday's trading day. So maybe around 372, I'll look at getting an early entry and then load the boat above 375 for 400 calls. So, so we have two plays off of our finviz that we went ahead and did some TA on. We have Nvidia 290 puts with a break and hold of 298.75 and Snow 400 calls with a break and hold of 375. So I showed you earlier on how to do the math with the options. So you can go ahead and take your own paper and pen and do the math on these two options that we did here to go ahead and calculate your profit return. Switching over quickly to flowalgo, let's go ahead and take a look and see if there was anything that came on flowalgo on Friday that will help us with our plays for next week. So there was only one Nvidia put that was bought in the morning that expires for next week. Otherwise, all the other Nvidia plays that were bought on Friday were for 0 DTE. One that carries over into next week were puts, 290 puts. Look at that. The same 290 puts that we talked about, right? Someone swept them for 135K. This algo score here basically talks about like how aggressive, you know, that particular sweep is. And this is semi-aggressive. It's probably like a D+, C- type of aggressive. And if I go back to look at the chart on Nvidia, the only reason for that is, I guess, it's only aggressive because it's coming back inside an accumulation zone. That would be my only reason for that. Or I really don't know. So I'm not even going to try. But they're looking at 290 puts as well for next week. So that's good for us. We were already on top of it. And then we came here and saw that they were on top of it also. Let's also take a look at the historic flow for Nvidia and see maybe, you know, starting Thursday, was there anyone who bought anything for last week for Nvidia? So we'll come here, we'll come down to the 17th, and we have more stuff here on the 17th. So we see here that on the 6th, there were two 290 puts for Nvidia for the 17th, equaling about $1/3 and they bought it up here 12.9 when Nvidia was at 291. So I'm pretty sure they sold it by now because Nvidia is now at 300, and at 12.6, that was when Nvidia did that huge drop to the downside, where it dropped all the way down to, I think, like 278, 280. So I'm sure that those people sold for sure. So anything else? No, the 17th, just a couple of bullish stuff that was bought on the 8th, which was Wednesday. And about $1.2 million worth of 320 calls when the price was at 322. And that was on the 8th. Or I think they may have gotten caught. They either scalped it or they're still holding it and they got caught, because on the 8th, it just continued to downtrend and downbreak. It did bounce off the 20-day moving average once. They bought it at 9:38 in the morning. So more than likely they sold it for a quick scalp or loss. So yeah, so I think we're good on our Nvidia puts. Nothing as far as unusual call options coming in for next week that would negate our 290 puts here. Let's take a look real fast at snow for the historical flow. Nothing. Nothing. Let's just extend this to Monday, maybe. One thing on snow that expired on Friday, 400 calls, which more than likely they already sold that sometime in the middle of the week. So nothing on the unusual call options for snow. So we just want to keep an eye on it just in case if we see some volume coming in. That's going to be our confirmation too. Otherwise, we can just get one small little starter contract, and hopefully it breaks that 375. We get some confirmation. We'll add on some more and play there. The only way that it's going to get that confirmation is with that volume pop anyway. So yeah, those are our two plays there, guys. For Nvidia 290 puts, break and hold 298.75, snow break and hold 375 for 400 calls. Let's just go real fast over some of our current plays for the challenge, just to give you guys some TA and what we saw on some of our calls, what we're looking for next week, and then we'll go ahead and end this video here. So all right, guys. So here on Facebook, we got into Facebook 3 times. Our first time that we got into Facebook was the break and hold of the 10-day moving average. We scalped it twice that day up into the 20-day moving average, which I told you guys was going to be resistance, and it was resistance. We played it the second day, a break and hold, and we played it above the 20-day moving average. But the second time that we got into Facebook that day, we got into swings and we got pretty much bag held. We came down to see if we retested this 20-day moving average, and then the close of Thursday's trading day just completely wiped out our contracts to the point to where we were, you know, we had some time on our contracts. So we said, you know what, let's hold, let's see if we can get a bounce back up. You know, it was a bad day in the market overall, but let's see if we can get a nice little bounce back up. And we did. We got a nice bounce up into Facebook. However, the market pulled back and so did Facebook. But then at the end of the day, it tried to reclaim the 50-day moving average here just below 330. However, we needed to reclaim that 20-day moving average here at 331.60. Once we do that, we're good to go to our trend line here, which is around 340. And then if we break 340, we should be coming towards our next selling pressure area, which was this double top area here at 350. So for our 350 calls, the reason why we held it is that we held the 50-day moving average and we're holding the 10-day moving average. Now, all that we need to do is break that 20-day moving average. The 10-day moving average will start to curl up. Once we get a cross on the 1020 cross and the 1050 cross, then that's 100% confirmation that we're back in bullish trend there. We got an uptrend line that we're also keeping here on Facebook. So for us to hold our calls, we want to make sure that we're holding this trend line above the 20-day moving average and make that break up there. For us, for our calls, right now, we're 50% down on our Facebook calls. We are 107 average, and Facebook is currently sitting at 54 cents. So we're 50% down. What we need on Facebook is a $4 move on Facebook in order for us to break even on Facebook. So we need Facebook to get to 333. So even if we break Thursday's high, if we break Thursday's high, we're 100% profit. So we need to break 336 end of day Monday for us to sell these contracts at 100%. If the math that I did earlier works out, and you guys can do the math yourself. I already did the equation for you guys earlier. We wrote it down. We went over it. I do it very extensively with my one-on-one students so they can calculate their profit on options. And as you saw earlier with Lucid, it wasn't worth for us to get into those options. So for us, a day trade or hold it is not worth it. But to scalp it, we can do that and just get like mini gains here and there because the contracts aren't expensive. But just the ROI on a day trade or swing wasn't worth it for us. So that's why it's very important to know how to calculate your Greeks and your option chain for your profit market or your profit target. So you guys can go ahead and do the equation to see why once we reach 336, why we would be at 100% profit. And why at 333, we would go ahead and break even on our contracts. With PayPal, we got into PayPal with the hold or the break of the 10-day moving average. We scalped it. We took profit. The next day, we scalped it as well for a huge we scalped PayPal the first day. And then at the end of the day, we got into swings. We held the swings the next day. And then we took the day trade of PayPal pretty much up into the second line here, and then we sold. PayPal went ahead and closed a little bit higher that day. The next day, we got into PayPal again during intraday. It bounced off the 20-day moving average and it bounced off this line of support. At that time, we went ahead and we got back into PayPal for a swing. And then just like Facebook, the market went ahead and dumped down. We went ahead and held it because we assumed, again, that we had some time and we can go ahead and reclaim this 20-day moving average, but we did not. Friday, we completely rejected the 20-day moving average. However, we came back down to the 10-day moving average and used it as heavy support, and we filled this gap here at 186. So we kind of crossed off two things off of our list as far as support. We crossed off the bounce off the 10-day, and we crossed off the bounce off the gap fill here. The gap fill came with heavy buying pressure. So now what we want to see is a bounce off this 10-day moving average back towards this 194, 196 area here. We break 196 on Facebook, it's going to go to that psychological level of 200 for sure, which was previous support and became the last resistance level here around 205 or 202 or whatever this level is here, 202.34. So if we break 196, we're going to see 202, which will put our $200 contracts in the money. I did pick up a 202.50 by accident, which is not bad either because that support line here is at 202.34, which basically will put 202.50 in the money. Once I sell the 200s, I'm going to sell the 202.50s. They're basically going to be green, just as green as PayPal on the 200 calls. Here for BA, we got into BA once it claimed again, it claimed that 10-day moving average as support. We got into BA this day. No. We saw it claim the 10-day moving average as support. We saw it reject the 20-day moving average. And then we got into BA once it crossed the 20-day moving average, but then it rejected it and came down the next day and then rejected it the next day again, but it's holding the 10-day moving average currently right now. So what I would like to see is a bounce back up off the 10-day moving average and go back towards the 20-day moving average here at 210. If we break 210, we'll see 215. We break 215, we'll go ahead and see 220, 222 here. BA typically runs about $5 a day, but a nice 3-day bullish run can yield us from 200 to 212. So we can see a $12 move in 3 days and take our price to 217, 220, and a break of this 215 here. We'll go ahead and put our contracts, I would assume in profit. You know, we're currently right now down pretty bad on them. We got them for 58 cents. They're down to 16 cents right now. So, you know, I'm assuming a move to the 50-day moving average here at 215 will definitely put us in profit there. So those are the reasons why we got into PayPal, Facebook, Boeing, and why we're still holding them, because they're holding supports for us at the moment. We'll reevaluate these on Mondays based upon the price targets that I told you that they need to hit in order for us to see some profit in them. We got MACD crosses to the upside on all of these. Histograms are in the positive section of all of these. So hopefully we get that bounce Monday and that rip in the market like we're looking for. BA is still trading in this channel as well. We're hoping that if we can break this 20-day, we can get back up here to the top of this channel. I don't want it to break it or expect it to break it, or I don't think I'm gonna hold it till it gets to the top of this channel. But if you just zoom out and you see, it's just been working the channel up and down, hitting the bottom, hitting. So we're trying to play that upside with that 10-day confirmation, because every time it holds that 10-day as confirmation here, you see it works its way to the upside, holds the 10-day as confirmation, works to the upside. So that's what we were trying to do here, was take this 10-day confirmation, work it to the upside. It does reject the 20-day sometimes, but then it gaps up and does its thing. So that's what we're hoping for here with the low selling volume on Friday, low selling volume on Friday. You know, we're hoping for next week for that overturn on our plays there. Ford was just a call sweep that came in on flowalgo, a bunch of Ford. They're doing like a CEOs and the buyback of shares and a bunch of other stuff. It was just super momentum. A lot of call flows going into next week, and a lot of leaps going into Ford. 25 calls, 22 calls. We got the 21 calls. 21 calls are in the money right now. If you look at Ford took off towards the end of the day. This is Ford on the daily. Big bull flag here, and big bull flag, and then the breakout that we were looking for, I think like a week ago when we played Ford, somewhere around this area here when they came out with the electric car news. And then finally, we got the MACD cross to the upside, histogram going positive, volume going to the upside, 1020 cross, confirming Bollinger Band squeeze, opening up to the top side, big break on Friday. So be nice if we can get a little bit of continuation, probably hold these to about 2250, and then you'll start to see it work its way back inside the Bollinger Band at that point. We only got one contract, but 2250, we'll go ahead and put our one contract at 150%, which would be $75 profit. If we have a $2,000 account, $75 profit is like 3% or something like that. So not bad, right? Just off of one contract. So there you go, guys. Thank you for watching this video. This is everything that we're going to be looking to play on Monday and look for next week. So we did finviz, we did a screener. That's the watch list. We got our two plays again. Nvidia 290 puts if we break and hold 298.75 and break below and hold below that. Snow, we're going to look at 400 calls if we could break and hold 375 on Monday. So as always, we'll always play the cues as well. We'll keep those on watch. We always watch the cues for overall market tech flow. And yeah, so thanks a lot again for watching the video, guys, and participating in the watch list and the finviz and all that other stuff. And I'll see you guys for Q&A on Sunday night for Trader Sync. And then Monday, I'll see you guys in the Zoom to continue our 2K challenge here. Thank you very much. See you guys later.